Cardano is making a massive move, and if that sounds interesting to you, make sure to continue watching this video. Hey guys, Pingu Charts here, and welcome back to another Cardano analysis. As always, if you do enjoy my content, make sure to hit that like and subscribe button. Guys, Cardano currently has been testing that level yesterday around the 45-cent mark, and we are currently seeing a massive move on Cardano. We did mention that if this level were to hold around the 45-cent mark, we could possibly see a move to the upside. Now, again, on Cardano, we do see on the 46-cent mark, we were currently rejecting, but it looks like it was another double bottom fake out, right? We mentioned that we could be possibly testing this level around the 45-cent mark, and we were in the oversold area. So then Cardano had this massive move. We broke this support level or resistance level. Old support becomes new resistance, and we actually broke way above, right? We actually broke the second support at 47 cents, and Cardano is currently testing the exponential moving averages. Now, what's going to happen next for Cardano? Well, after we broke the 47-cent mark, we are currently looking for the 49-cent mark retest. I did mention that we are kind of in this head and shoulder pattern again, kind of, right? On the technical analysis point, you can see that we had this sort of left shoulder, we have the head, and now it looks like Cardano actually wants to go ahead and make that right shoulder and then continuation of the move down. The only reason I don't really consider this a head and shoulder that much is because we are in a downtrend. Usually you don't see these in a downtrend, but again, some traders might be looking at it from that perspective, so that could possibly explain the move too, right? It's always good to have different sort of perspectives on Cardano or just technical analysis in general and kind of look at what other traders are looking for, right? So a lot of traders are probably looking for this right shoulder pattern to play out. Now, whether or not we will actually go and retest the 51-cent mark is a question, right? In my opinion, if you are in a long position, the take profit zone should be around the 50-cent mark. Whether or not we continue to break above, right? You don't want to take that risk of that massive move to the downside. But currently, Cardano is looking quite bullish, right? We are above these support levels again. We have tested them, and on the exponential moving averages, we actually did retest and move to the above side, and currently retesting the exponentials on the 50. If we break above the 50 exponential, this would be a very large kind of W formation, and we can actually see a move to the upside. But again, we actually have to get above this level, and the major resistance level will still be the 49-cent mark. If we can get past above the 49-cent mark, that is extremely bullish for Cardano. Now, on the lower time frames, we can see we've already broken above the 50 exponential, but again, the higher time frames hold more weight. So you want to be waiting for that 4-hour candlestick. We can possibly see a move like this and then a continuation down, because again, this kind of looks like an M formation forming on the 1 hour. But if we do continue breaking above this level to the 49-cent mark, that's going to be extremely important for Cardano to get above, right? If we do see that level and we see a bounce and then a move up, that's going to be extremely good for the bulls. Now, from the bearish situation, obviously, if Cardano cannot break above this level around the 49-cent mark, we can see a move back down to the lows again, hitting that level at 45 cents and possibly retesting the 44-cent mark. Now, obviously, on the 4-hour chart last night, we did see that candlestick form, and I did mention that, we do have a hammer candlestick forming, but it's going to be extremely important to see the next few candlesticks before we see the move. We did see the hammer stick candle forming, and I'm sure a lot of traders are like, okay, we have a hammer on the 4 hour, so this should be a good trade. Got faked out, moved to the downside, probably got stop hunted around the 45-cent mark before we saw the move to the upside, right? This is why it's extremely important to place your stop losses below the previous wicks, right? So if you were a trader and you were looking for placing a stop loss, you would have placed it anywhere from 44 to 43 cents. The move wouldn't have gotten close to your stop loss. That's why it's really important to look at the previous wicks when you're trading this sort of level. But as of right now, guys, just pretty much all I have for you guys today. As always, just make sure to continue watching this level and make sure we get that break above. If you did enjoy my video, make sure to hit that like and subscribe, and I hope you guys have